Did you see President Xi's New Year's speech? The real standout to me was how early in the speech the breakthrough of the Chinese automobile industry was celebrated. It was very early in that New Year's speech. You can find it on YouTube. You know, it really highlighted the importance for China, as well as the pride, really, in what they had accomplished. And it kind of brings it all back home. Like, if you're trying to grow your economy, I mean, what are some of the biggest industries in the world? I mean, real estate's a massive industry, but that one's kind of played out, isn't it? Especially in China. So what's next? What other industry can we do and do better in? And of course, automobiles, which used to be the privileged area of many European and, North American manufacturers, maybe Korean, Japanese, right? All of a sudden, you're seeing, devastation in the automobile industry. And wait till you see these numbers. I mean, it's a small sample, like microscopic sample of cars that sold in the last week in China and the vehicle registrations. But I mean, it is remarkable. And hello and welcome to the Northern Miner Podcast. My name's Adrian Pocobelli. Sleuthing this whole situation, because of course, some newer listeners might say, well, what does this have to do with mining? And the answer is everything. How can China do that? I mean, that is the question I ask you, and feel free to write a comment if you think otherwise. At the end of the day, the U.S., as it currently stands, can compete technologically, I would imagine. You don't need to worry about labor, I would argue, anymore. If you are thinking in a very kind of cutthroat way, you don't need to worry about labor. You can make a robot factory, it's probably going to be cheaper, right? Is it the technology? Well, it seems like the U.S. is doing pretty good. They may even be ahead. So what is the ace up China's sleeve? And at the end of the day, as I've been saying here for probably years, it's the metals. They process the metals, and so they can always sell it to themselves cheaper. They can frankly sell it to themselves at cost. Heck, they can even subsidize it. And if we're to extrapolate what happened in the car industry, put it this way, the West, and the US in particular, doesn't have any time to waste anymore. It kind of already ran out of time to waste on securing metals and the supply chain and processing its own metals. That is the only way, I would argue, you're going to compete with China. And until that's done, start saying goodbye to your automotive industry, start saying goodbye to your aircraft industry, start saying goodbye to anything that requires metal. Because you're going to have a cheaper price, and there's China getting Russia's cheap energy. And where's Europe in this whole situation? So it's quite a bleak picture if you're looking from the Western perspective. And when you look at the numbers, I mean, check this out, just as a small sample. This is from, I believe, the China Evening Post, cnevpost.com, and they have China EV insurance registrations by brand for the last week. Okay, so this is people registering their car for insurance in China in the last week, ending January 5th. NIO is 3,000 registrations. Onvo is 2,300 registrations. Tesla is 5,500 registrations in the last week. And BYD is 36,500 registrations in the last week. So you put the competition together, you put NIO and Onvo and Tesla together, and you have 10,800 cars that were registered. So the next three biggest companies are still less than a third of BYD's car registrations in the last week. So that is just in China. And, with China, they say, they're trying to build a consumer base there and make themselves more resilient, in a sense, not being so reliant on the American consumer. They have a lot of people there, don't they? So all to say, we have a new president coming in on January 20th. Like, I don't think there's any time to waste in terms of the metals. What we've seen, I'd argue, in the last 2 years is funding. There has been an investment, a remarkable amount, almost like a bubble-ish kind of amount, one could argue. I mean, there's just money being thrown left, right, and center, and that's all fine and good. But if you're putting money together for a mining project, it's probably years away, is my point. Like, these projects take a lot of time. Now, Trump sounds like he wants to reduce permitting dramatically. And generally, it's right near the top of the concerns for mining companies. So, let's see just how fast they can do this, because the longer it takes to really get an independent metals supply chain where you're not going to be at a structural disadvantage to China, who owns a good majority of the supply chain. You look at graphite, where they almost own the entire, synthetic graphite, almost all of it. Regular natural graphite, I think it's 60 or 70%, and on. We can go through the metals as we have in the past. With China dominating the processing, I would argue the West has no choice but to process basically themselves. Otherwise, they will always be at a structural disadvantage to China on price. And as we know, price is king. Now, finally, an interesting thought as I was putting all these stories together for today, as you zoom out, what I want you to look for today is there is an interesting unifying thread through almost all of the stories that we're going to cross today. And that thread is what I would call resource nationalism. Cecilia Jamasmie wrote an article on it about, a month ago. We're seeing it over and over, where we're basically seeing countries, in not so many words, putting export restrictions. Let's call it generally this, where they're being much more careful about the metal that leaves the country, to speak in very broad terms. We see the U.S. steel deal, Nippon Steel being rejected. We're going to look at that in a second. We see what's going on with Barrick and Mali. We're going to get an update on that next. We're seeing what's going on in Indonesia with Freeport checking if they can export their concentrate because now it's the new year. We're seeing China limit its lithium battery technology, right? So what we're seeing, I would say, an intensification, arguably, of deglobalization, and maybe that's oversimplifying. Like maybe it's more of a bifurcation. In a sense, that's a debate that can be had. Is this a bifurcation of the global economy, or, deglobalization where it's kind of every country for themselves? It's probably more like a bifurcation, right? So I just want you to keep that in mind as we go through these stories, because in a sense, as I've described this beat in the past, sometimes it's just one big story with all these little stories as, manifestations of that larger story, where we can look at, the example of BYD as Exhibit A in this new world that we live in as we begin a new year. And before we get to Barrick, we have a wonderful guest on this episode. We have Cam Currie of Currie Metals and Mining, which is part of Canaccord Genuity. And he comes back to give us his take on the gold stocks. It was a fascinating year in gold stocks. We had winners and losers, as Cam calls them, the haves and the have-nots. Some performed incredibly, some performed not that great, and actually they went negative, despite what we saw in the gold price. So I asked Cam all about that. Fascinating discussion and great insight as ever. So let's turn to Barrick now. Again, probably one of the big stories of 2024, and now continuing on into 2025. So here's the latest on Barrick. They released a new press release, which all the stories, from what I could tell, seem to be based on. And here it is from Barrick's website. Barrick update on Loulo-Gounkoto operations in Mali. Barrick Gold Corporation remains restricted from shipping gold from its Loulo-Gounkoto mining complex in Mali. In addition, an interim attachment order has now been issued against the existing gold stock on site, which further prevents its export and disrupts normal operations. So, translation, it sounds like not only is the government of Mali stopping the export of gold at the border, they're now trying to go on site and seize the gold. Or at least there is an order that all of the gold on site cannot be exported. It sounds like it's ready to be seized, translation, but that's an inference on my part. Barrick believes the interim attachment order is unwarranted and is in contravention of the agreed dispute resolution mechanism. So, in a sense, it's not quite the last straw, but we're almost at the last straw with Barrick. So they did the International Center for the Settlement of Investment Disputes last week, right? Arbitration. Now they're basically saying we're ready to close the mine, as you're going to see here. because now even the gold on site is a target here. The press release continues. Barrick's president and CEO, Mark Bristow, says the inability to ship gold not only affects operations, but has broader implications for the local economy, the 8,000 employees, and its many local service providers. If this issue is not resolved within the coming week, Barrick will have no choice but to temporarily suspend operations at Loulo-Gounkoto. Such an action would be deeply regrettable but necessary, as previously reported. So Barrick threatening incrementally, interestingly, they're still leaving room for negotiation and for opening the mine back up by saying they're temporarily suspending operations, interestingly. It continues, and we have a quote from Mark Bristow in the next paragraph. Quote, Barrick remains committed to constructive engagement with the government of Mali to resolve the existing disputes amicably. As previously disclosed, we have initiated arbitration through the International Center for the Settlement of Investment Disputes, or ICSID, as a recognized mechanism to address these matters of disagreement while maintaining the integrity of existing agreements, end quote. He continues, quote, in parallel, Barrick continues its efforts to reach an agreement with the Mali government on a memorandum of agreement to resolve the existing disputes, redefine the partnership's future, and increase the state's share of benefits from the Loulo-Gounkoto complex, end quote. He noted the situation was further compounded by the continued detention on unfounded charges of several of Barrick's Malian employees, and the company was actively working to secure their release and ensure their well-being. Now, they're quite vague here on how many people have been taken. Now, my tally is at least 4, and then when they put out the arrest warrant for Mark Bristow, they also put it out for the operator of the mine, from what I understand, the employee who operated the mine, and I think that could be a 5th. So they're not being clear and frankly transparent on how many people are currently detained. Now, to be fair, they may be doing that in order to hopefully perhaps try and secure the release of these people. So I'm not going to give them too hard of a time on that. Maybe if they start itemizing each person and saying who it is, maybe that just creates more tension and perhaps lessens the likelihood, potentially, of releasing them. So I'm not going to give them a hard time on that. But we don't know how many people they're talking. It sounds like minimum 4, but it could be more. And what we also saw with the Resolute mining was those people were also, quote unquote, detained, but in a press release by Barrick, the last or the one before it, they were talking about how people from another company had been jailed, right? And we pointed that out at the time. So when they say detention, it's not an unfair speculation to infer that this means jailed. To speculate out loud here, but I don't think it's a huge jump. It continues, the company reiterated its commitment to the safety and rights of its workforce as a critical priority, and this is another subject I was bringing up. What does Mark Bristow do with these 8,000 employees? Does he tell them to go to work when the government seems to be showing up and arresting people potentially randomly? Another reason to shut this mine down, unfortunately. And finally, we have another quote from Bristow, quote, Barrick continues to be a steadfast partner to Mali and its people, contributing significantly to the country's economic and social development for over nearly 3 decades. We are committed to dialogue and finding a mutually acceptable resolution that allows us to secure the future of Loulo-Gounkoto as a vital economic contributor to Mali, end quote, Bristow said. So that's the latest on Mali and Barrick. So now they're threatening a shutdown. And what is the timeline here? Within the coming week is the timeline. If this issue is not resolved within the coming week, and that's almost ambiguous what the coming week means. Does that mean this week? Barrick will have no choice but to temporarily suspend operations at Loulo-Gounkoto. So that story, frankly, escalating more than anything. Another huge story that we've been following for months, as a matter of fact, here is the U.S. Steel, Nippon Steel merger, as I've been saying here since actually the very first time this story was published. The optics of a Japanese company coming in and taking over an iconic named company like U.S. Steel, I don't know what Nippon Steel was thinking. It sounds like they needed the deal. I think it was like a hope and a prayer that they could take this over, because it didn't take a lot of political foresight to say this is just not the environment for this kind of takeover. And sure enough, the Biden administration in the closing days of its term denied it. And here's a story. U.S. Steel Nippon sue Biden administration over decision to block merger. This is Reuters via mining.com. U.S. President Joe Biden violated the Constitution by blocking Nippon Steel's $15 billion bid for U.S. Steel through a sham national security review the companies alleged in a lawsuit they said was filed on Monday. So the companies sound like they've been ready for this for a while, actually. The companies want the federal court to scrap Biden's decision to scuttle the deal so they can secure another shot at approval through a fresh national security review unfettered by political influence. The lawsuit alleges Biden prejudiced the decision of the Committee on Foreign Investment in the U.S., which scrutinizes foreign investments for national security risks, and violated the company's right to a fair review. The merger had become highly politicized ahead of the November U.S. presidential election, with both Democratic Biden and Republican President-elect Donald Trump pledging to kill it as they wooed voters in the swing state of Pennsylvania, where U.S. Steel is headquartered. United Steelworkers President David McCall opposed the tie-up. And scrolling down, Biden sought to kill the deal, quote, to curry favor with the USW leadership in Pennsylvania in his bid for re-election, end quote, the companies allege. And they continue in a statement, quote, as a result of President Biden's undue influence to advance his political agenda, the Committee on Foreign Investment in the United States failed to conduct a good faith, national security-focused regulatory review process, end quote, the companies said in a statement announcing the litigation. A White House spokesperson said, quote, a committee of national security and trade experts determined this acquisition would create risk for American national security. President Biden will never hesitate to protect the security of this nation, its infrastructure, and the resilience of its supply chains, end quote. Finally, Nippon Steel Vice Chair Takahiro Mori told Nikkei in an interview on Monday, quote, we can't back down after being treated unreasonably. We will fight back thoroughly. And just one more story. This is from Reuters. According to the White House, decision to block Nippon-U.S. Steel deal was about keeping critical business in American hands. White House National Security spokesperson John Kirby said on Friday, quote, this is about U.S. steelmaking and keeping one of the largest steel producers in the United States, an American-owned company, end quote. So interesting there. And finally, just a couple of headlines on DRC and Myanmar. So in the Democratic Republic of Congo, of course, they have this rebel group called the M23. They've been trying to get a ceasefire between the M23, again, who are thought to be supported by Rwanda, but Rwanda is denying it. And there has been a violation of the ceasefire. So here is the headline, and this is the East Lay Voice. U.S. condemns M23's ceasefire violations in eastern DRC. Just a couple of lines here. The United States has condemned what it termed as a, quote, brazen ceasefire violation in the Eastern Democratic Republic of Congo, end quote, that saw the M23 advance their moves and take over Masisi town over the weekend. In a statement attributed to the State Department spokesperson, Mr. Matthew Miller, the U.S. said the move damages efforts to reach a negotiated peace in eastern DRC while harming and displacing civilians in the area. And finally, he said, quote, M23 must immediately cease hostilities and abide by the ceasefire. We reiterate our longstanding call for Rwanda to immediately withdraw all Rwandan Defense Force personnel and equipment from the DRC, end quote. He said, noting that the Rwanda-backed armed group remains under sanctions by the U.S. and the UN. Quote, to end the conflict and suffering, it is vital that both the DRC and Rwanda uphold their commitments to the Angola-mediated Luanda process and ensure that the reinforced ad hoc verification mechanism is operational, end quote. And of course, the reason why we're discussing this, for those who are new to the program, is this is where all the conflict minerals are. And in fact, DRC lawyers are now suing Apple in France and Belgium, accusing Apple of getting their supply of 3T minerals, so to speak, from this region. And the one consistent character trait of the M23 is they're aggressive and they're well armed. They seem to be striking victory after victory here, and they seem to want to keep the fighting going because it seems to be working in their favor. Another headline here, just out of Myanmar, China-backed election raises fears of, quote, negative peace, end quote, in Myanmar. And of course, there's a huge amount of heavy rare earths that supply China's rare earth supply chain that supplies the world. And so here's just a quick update on Myanmar. As Myanmar's military government prepares for elections in 2025, attention turns to neighboring China, which critics say is pressuring Southeast Asian nations to treat the vote as a solution to Myanmar's ongoing political crisis. So there was recently a meeting in Bangkok, and China was a participant at this December 19th meeting that included Bangladesh, India, Laos, and Thailand, who are all neighbors of Myanmar. As it says here, at the meeting, Chinese Vice Foreign Minister Sun Weidong urged the neighbors' representatives to support Myanmar's, quote, peace and reconciliation, according to a statement by China's foreign ministry. Quote, all parties should respect Myanmar's national conditions and prioritize people's livelihoods, end quote, Sun said. So China hoping to resolve this through an election in 2025. And of course, this country borders China. And again, these rebels, don't forget the news story from August where we saw that the U.S. was helping back some of these rebel groups. So a kind of latent, hidden conflict here between China and the U.S. taking place in Myanmar, one could argue. So considering the magnitude of the players at work here, a bit of a ignored story here that I happily share with you. As well, Canada put out a joint statement on the human rights and humanitarian situation in Myanmar. So Canada criticizing the military junta for human rights violations as well. So interesting developments there. So coming up, we have a wonderful show. We have Cam Currie of Currie Metals and Mining, which is part of Canaccord Genuity. A wonderful interview there to get us started in the year talking gold and gold stocks. With that, if you want to find us online, you can find us at northernminer.com. You can find us on X at Northern Miner. Find us on Instagram at The Northern Miner, and you can also find us on LinkedIn and YouTube, where we also host these podcasts and wherever podcasts are available, including Spotify, SoundCloud, and Apple Podcasts. And with that, let's turn to the news. And turning to the website, China flexes lithium dominance with plans for tech export curbs. This is Bloomberg News via mining.com. China is planning tougher scrutiny on exports of technology to make battery materials, as Beijing looks to protect its grip on a crucial supply chain amid rising global trade tensions. The government has proposed adding various technologies, some used for lithium refining and battery chemicals production, to its list of items that are subject to export controls, according to a notice seeking public opinion from the Ministry of Commerce on Thursday. Interesting, they are seeking public opinion. The plan appears aimed at protecting innovations that China has developed during its rise to dominate global battery and electric vehicle production. It comes against a backdrop of burgeoning competition with the U.S. in everything from critical minerals to semiconductors. And we have a quote from Yu Yakun, analyst at Kofco Futures. Quote, this shows the government is aware of the importance of keeping these advanced lithium technologies secret. Overseas investments with such technologies will be under stricter scrutiny. End quote. The proposed curbs target a selection of processes used to make battery-grade lithium chemicals, including direct lithium extraction, an emerging method in which China has considerable expertise. It also covers some specific types of chemical compounds used in making cathodes that are crucial to the performance of batteries. The latest move is subject to public feedback and could change, but it left battery companies in China and the rest of Asia scrambling to understand the potential implications. There's a focus on what the tighter scrutiny might mean for China's growing overseas investments in the battery supply chain, especially in the case of joint ventures with foreign companies. The restrictions, quote, may not affect the projects which are currently operational or under construction, end quote, outside China, but they might impact some future investments, said Peng Zhu, an analyst at Bloomberg NEF. The new export controls would cover technology for making certain types of lithium iron phosphate cathode, as well as lithium iron manganese phosphate cathode and iron phosphates. Last year, China put the know-how for making rare earth metals under similar restrictions, which subject overseas shipments to a higher degree of scrutiny. The measures are relatively narrow in scope, for example, targeting only the more advanced types of the named products. Battery cathodes can differ widely in performance and cost, and China has spearheaded efficiency gains in the lithium iron phosphate, or LFP, units that are gaining popularity in the global EV industry. The proposal aims to preserve China's leadership in the, quote, LFP battery supply chain in high-end products rather than imposing comprehensive export restrictions on LFP technology, end quote, Citigroup analyst Jack Shang wrote in a note. So it sounds like they want to protect basically the bleeding edge of the technology. So more barriers being put up in the global economy. Continuing on, CMOC sets cobalt production record in 2024. This is by a staff writer at mining.com. China's CMOC group has set a record in annual cobalt production driven by the rapid ramp-up of its African mines. The company announced on Monday it produced 114,000 tons last year, nearly double the 56,000 tons recorded in 2023. The figure also exceeded its 2024 guidance, which had capped expectations at 70,000 tons. So don't forget that story that we came across maybe 3 months ago, where China decided to stockpile cobalt. So they're producing a ton of it, they're selling it to themselves, and stockpiling it is what seems to be happening. Again, I'm kind of back to why isn't the West stockpiling like left, right, and center? We have nickel below $7. You know, the U.S. government can invest in projects, but it's going to take years for these projects to come online, probably several. So you can get the finished product right now at pretty good prices. In fact, you might say rock bottom in nickel and other metals, cobalt, lithium, right? Battery metals. So I'm not sure what the holdup is here. Continuing the article, CMOC overtook Glencore in 2023 as the world's largest cobalt supplier thanks to a significant output boost from its massive Kinsafu mine in the Democratic Republic of Congo, which began operations in the second quarter. Like, to me, what they're doing, I mean, if you had to take a guess at what's happening here, China is keeping the price low by oversupplying the market, and they're buying all of it. And in a sense, like, the market allows them to do this. So they're playing by the rules here, one could argue. And finally here, cobalt is a critical mineral with a wide range of commercial, industrial, and military applications. It has gained significant attention in recent years due to its use in battery production. Today, the EV sector accounts for 40% of the global cobalt market. In November, the company warned of cobalt's declining importance in the electric vehicle market. The DRC currently produces 74% of the world's cobalt supply. Although cobalt deposits exist in Australia, North America, Europe, and Asia, the DRC holds the largest reserves by far. China is the world's leading consumer of cobalt, with nearly 87% of its cobalt consumption dedicated to the lithium-ion battery industry. Continuing on, Chinese firm to build Guinea's biggest alumina processing plant. This is Bloomberg News via mining.com. China's State Power Investment Corporation will start the construction of its alumina processing plant in Guinea this year, after producing bauxite in the West African country for the past 3 years. SPIC, or State Power Investment Corporation, will start the construction in March and complete the refinery that will have the capacity to produce 1.2 million tons of alumina per year by the end of 2027, the presidency said in a statement. So here's China building another refinery. And how often do you hear in North America or Europe of a new refinery being built? So the perception here is China keeps building these things. China already has what seems like almost an insurmountable lead, and that lead seems to be growing despite all of the mineral security partnership, Pentagon investments, and whatnot. I mean, here's another refinery going up, and they expect it to be producing by the end of 2027. I mean, at what point is the West going to, try and outpace China? If there's going to be a catch-up here, at what point is the West actually going to start to keep up with China and outpace them in terms of building refineries and processing facilities? I mean, it seems crucial, doesn't it? This is another example of barriers being put up in this next story. Cameco suspends uranium production at Inkai JV in Kazakhstan over bureaucratic holdup. This is Blair McBride at the Northern Miner. Cameco's Inkai joint venture project in Kazakhstan has suspended uranium production because of a bureaucratic holdup, the Canadian producer said Thursday. The In Situ Recovery JV, in which Cameco holds a 40% stake, and state-owned Kazatomprom holds 60%, didn't get an extension to submit its project paperwork because of a delayed submission to Kazakhstan's energy ministry. The extension was expected to come through last year, and as recently as December 26th, reports hadn't indicated that production might be suspended, Cameco said in a release. The Saskatoon-based company's shares gained 2% to $75.28 apiece on Thursday morning in Toronto for a market cap of $33 billion Canadian. And we have a quote from BMO Capital Markets analyst Alexander Pierce, who said, quote, "The company highlighted the documentation is expected to be submitted in the next couple of weeks, but it is not clear on a timeline for the approvals process and commencement of operations," end quote. So a little bit of an ominous story, I would say, for Cameco and for uranium in the West, I would argue. Continuing on, Gates Bezos-backed Cobalt Metals raises $537 million in race for critical minerals. This is by a staff writer at mining.com. Cobalt Metals has raised $537 million in its latest funding round as it seeks to become a key player in the race for critical minerals needed for the energy transition. Backed by investors such as Microsoft's Bill Gates and Amazon's Jeff Bezos, the company said its Series C funding round valued cobalt at $2.96 billion. The round was co-led by new investor Durable Capital Partners and a pair of T. Rowe Price funds making their first investment in the company. The Berkeley, California-based Cobalt uses artificial intelligence to find deposits of minerals such as copper, lithium, and nickel. According to the company, the investment will fund new exploration, help bring high-potential projects to production, and bolster research and development. To date, it has raised $1 billion. And scrolling down a bit, the startup is now advancing 60 active projects spanning 4 continents: Africa, North America, Australia, and Asia. Using artificial intelligence, Cobalt aims to create a Google Maps of the Earth's crust, focusing on finding copper, cobalt, nickel, and lithium deposits. It collects and analyzes multiple data streams from old drilling results to satellite imagery to better understand where new deposits might be found. Algorithms applied to the data collected determine the geological patterns that indicate a potential deposit of cobalt, which occurs naturally alongside nickel and cobalt. I tell you, it gets me thinking, AI and exploration, I would argue, are a match made in heaven, actually. Because right now, exploration is very expensive, and you put AI into the mix, that could really change the whole exploration game. As it says here, finally, Cobalt said the technology can locate resources that may have eluded more traditional geologists and can help miners decide where to acquire land and drill. Very interesting. Continuing on, Biden official issues permit for Perpetua's Idaho antimony gold mine. This is Reuters via mining.com, just a couple of lines here. The Biden administration on Friday issued the final mining permit for Perpetua Resources' Idaho antimony and gold project, a move aimed at spurring U.S. production of a critical mineral at the center of a widening trade war between Washington and Beijing. Permitting for the mine, backed by billionaire investor John Paulson, comes after Beijing last month blocked exports to the U.S. of antimony, a metal used to make weapons, solar panels, flame retardants, and other goods for which there are no current American sources. The U.S. Forest Service released the final record of decision for Perpetua's Stibnite project, essentially the mine's permit, after an 8-year review process, according to documents published on the agency's website. And to be frank, the only reason why this seems to have been approved when it was is it comes right on the heels of the export ban of antimony. So this company has been waiting 8 years to get a permit. What if they had gotten a permit after 3 years or 1 year? This company would probably be producing antimony. I mean, a bit of a lesson here, I think, in this permitting situation. Another story on permitting, Hudbay receives all permits for Copper World project in Arizona. Hudbay Minerals' proposed 85,000 ton per year Copper World project in Arizona is now fully permitted for development after receiving all 3 key state-level permits. On Thursday, the miner announced that the Arizona Department of Environmental Quality had issued its air quality permit. This, it said, combined with the earlier aquifer protection and land reclamation approvals, completes the project's permitting process. And here's a quote from CEO Peter Kukilski, who said in a news release, quote, "With the receipt of the air quality permit for Copper World, we firmly believe Hudbay now has the best fully permitted copper development project in the Americas. End quote. Very interesting. And continuing on, Freeport, Indonesia in talks with government on copper concentrate exports. This is Reuters via mining.com. Freeport, Indonesia is in discussions with the government about being able to continue copper concentrate exports until its new Manyar smelter returns to full operations, a spokesperson for the miners said on Friday. The company was allowed to export copper concentrate until the end of December, as its new smelter was then expected to process its mine output domestically. However, the Manyar smelter is currently shut down after a fire in October. So Indonesia can't be thrilled about this situation because they already had an extension. Continuing in Indonesia, Indonesia reviews nickel ore mining quota to steady prices. And this is Reuters via mining.com on January 3rd. Indonesia is reviewing its annual nickel ore mining quota, seeking to prevent further price falls, Energy and Mineral Resources Minister Balil Lahadalia told reporters on Friday. He did not disclose how much ore production will be allowed for 2025, saying the quota will depend on ore demand. Quote, "We must maintain a balance. The quota should not be so high above industry demand that nickel prices become cheap," end quote, Balil said. Indonesia is one of the world's biggest producers of nickel products since a 2020 ban on exports of raw nickel. And I remember that story. That was one of the first countries to really put their foot down and say, you have to process this metal locally. And finally, just a few headlines. Sierra Resources secures loan waiver amid Mozambique unrest. And this is Reuters via mining.com. Another headline, Brazilian miner boosts rare earths output in challenge to China's grip. This is Bloomberg News via mining.com. So Brazil ramping up rare earths. Finally, Manganese X secures $1.4 million investment from Sprott. This is by a staff writer at mining.com. Manganese Energy has secured a $1.4 million investment from Canadian mining billionaire Eric Sprott to support its Battery Hill project in New Brunswick. Located near the town of Woodstock, New Brunswick, the project hosts a series of banded iron formations that collectively constitute one of the largest manganese resources in North America, according to a study cited by the company. Very interesting. Those are your news stories. Now, let's take a look at metal prices. And turning to metal prices, let's take a quick look at the bond market for context. The U.S. 10-year bond is yielding 4.64%. That is 0.12% higher than last week, and even 0.01% higher than the week before that. So new highs in yield here on our weekly tabulator. UK 10-year gilt is yielding 4.65%. That is 0.08% higher than last week. The Italy 10-year bond is yielding 3.6%. That is 0.08% higher than last week. The German 10-year Bund is yielding 2.46%. That is 0.1% higher than last week. And finally, the Japanese 10-year bond is yielding 1.13%. That is 0.05% higher than last week. And, and only a couple of months ago, the Japanese 10-year bond was yielding 0.93%. It is now at 1.13%, so we're seeing yields go up across the board here of the 5 countries we track. Turning to precious metals, gold is trading at $2,658.20 per ounce. That is $31 higher than last week. Silver is trading at $30.84 per ounce. That is $1.55 higher than last week. Platinum is trading at $928.60 per ounce. That is $26 higher than last week. And palladium is also higher at $896 even. That is $13 higher than last week. So precious metals higher. Turning to industrial metals, copper is trading at $4.12 per pound. That is 7 cents higher than last week. Iron ore is trading below $100 at $99.44 per metric ton. That is $4 lower than last week. Aluminum is also lower at $1.13 a pound. That is 3 cents lower than last week. Lead is unchanged at 88 cents per pound. Nickel is at $6.90 per pound. That is 9 cents lower than last week. Tin is at $13.23 per pound. That is 17 cents higher than last week. Cobalt is unchanged at $11.02 per pound. And there was a time, while we've been tracking cobalt, that it was as high as $37 per pound. It is now $11. And China is stockpiling. Continuing on, lithium is trading at $10.33 per kilogram. That is 5 cents higher than last week, but still threatening that $10 handle on lithium. Uranium is trading at $75 even. That is $5 higher than last week, so bouncing off of $70. And zinc is trading at $1.31 per pound. That is 6 cents lower than last week. So zooming out, precious metals edge higher. Industrial metals trend sideways to lower. It feels like a wait-and-see market, doesn't it? I guess there's a wait-and-see on Chinese stimulus. There's also a wait-and-see on the new president in the United States and what will take place there. So metals continue to edge sideways. And those are your metal prices. Coming up, I'm very pleased to welcome back to the show Cam Currie of Currie Metals and Mining at Canaccord Genuity Group. And we have a wonderful discussion really on the gold stocks. And it is not financial advice, but a pretty darn interesting read from a veteran in the market. I also get his thoughts on the dollar, BRICS, gold, and more. So I hope you enjoy the interview, and I'll see you on the other side. Joining us today, I'm very pleased to welcome Cam Currie of Currie Metals and Mining Group at Canaccord Genuity back to the Northern Miner podcast. Cam, welcome to the show.
Adrian, thanks for having me back again.
Well, it's wonderful to have you, Cam. I always enjoy our conversations. They are worldly conversations. They are big picture conversations. And you have a wonderful specialty in the gold market. And I'm hoping as we begin 2025, you can help us understand how you're seeing the gold market. Again, you seem to have a front row seat here. Put it this way, gold seems to have had a pretty good year last year. When I look at GLD here, 29%, 30% on gold for the year. But we look at GDX, which is, an ETF of the gold miners, 17%, right?
Mm-hmm.
And so I'm wondering, how are you seeing the gold market and, the gold stocks? Tell us some of your big picture observations, if you can.
First of all, last year was a very good year for gold itself. Like you said, up 28%. But the gold equities were a story of have and have nots. There were some great success stories and great disappointments. I mean, one of the examples, for example, is the only S&P 500 listed gold company is Newmont. And Newmont, which hit a high of $60, now trades at $38 US a share. And so that's a barometer to the generalist funds in the United States of the gold sector, unfortunately. And so when people see that lack of performance, despite gold price, it chills an audience of people who are looking at our space in the first place. So there's an example. But then you look at something like Kinross, a senior producer, stock went from $7 to $14.50. And so it was a double for us. And so, there's a story of two companies. One delivered, one didn't. And unfortunately, the bigger one is the largest gold mining company in the world. And it's kind of looked at as a go-to, and it's kind of chilled the audience. Those are just two examples, right? There's lots of have and have nots, but really what it comes down to is gold, equities are equities. And overall, the equity market of gold companies is still largely unrecognized by U.S. investors. And that's one of the big problems we have, is there's no money flows coming into our space.
I mean, it is remarkable when you look at Newmont's chart. I have a 1 year on Google, so it's not exact here. I'm January 6th going back a year, but we are down 5.7%. What happened? Do you know what happened to Newmont? Because, it was having a beautiful year. It was up to $58.68 October 22nd, and then it just cratered. And it seems to be continuing in a pretty strong downtrend. Do you know what happened to Newmont?
Well, they didn't deliver on production, and their costs were much greater than expected. And they deal in two of the most expensive jurisdictions in the world. They're dealing in Nevada and Australia, where costs have still remained high because labor costs are extremely high in those jurisdictions, right? And so that was one of the culprits. And Barrick, the same thing. Barrick, it hasn't performed either. So you have some of these big companies that have expensive labor pools and the margins never really expanded. Whereas you look at some other regions of the world where labor and production costs are cheaper, and you've seen great profitability increases. I mean, you look at Lundin Gold, for example, Ecuador. Ecuador people were questionable about, and they've delivered, and it was one of the best performing gold stocks last year. Their ASICs are like $850 US an ounce, opposed to 1600 for some of the big boys. So that's huge margin differential, right?
Interesting. So would you then, and I suppose it stands to reason then, like, would you say this is an earnings story then? The fact that, say, I look at IM Gold, I mean, 130% from a year ago. That's remarkable. As you said, Kinross, even Agnico Eagle up 50%. Is this an earnings story?
I wouldn't say it's necessarily an earnings story as it is a delivering story. In the case of IM Gold, for example, don't forget, Cote was way over budget, and IM Gold hit a low of $1 a share. And there were solvency risks, all that, the risks. And then they delivered. And so it's more of a delivery story in the case of IM Gold. And so you get some of these companies that go through cost overrides and capex expansions in a capital market that's unforgiving about disappointments. And you can get in the penalty box pretty quick. But as you come out of those penalty box, you can deliver. And in a market like this, that's one of the things that's very opportunistic for investors is recognizing these deliveries when the market isn't. And then the money flows come in from index weightings and you can benefit immensely.
Interesting. And so, in a sense, to kind of reframe this whole discussion to a certain degree, the gold stocks are often thought of as leverage on the gold price, right?
Correct.
And apart from a few exceptions, when we see big run-ups temporarily, in the last 15 years, and feel free to disagree with me, it doesn't seem to be playing out, with some exceptions, right? And so do we need to question the thesis, or maybe another way of putting it, like, should the retail investor be dabbling in trying to pick the right companies from a practical point of view? Or should they be really, for all of the problems with ETFs, like perhaps they're better suited with GDX because then they don't get stuck with a Newmont, for example, or maybe Newmont's in, but it gets averaged out.
Well, if they're trying to do it themselves, absolutely, because they don't have the expertise. Retail investors have the expertise to actually kind of sift through and look at the companies that are the have and have nots. And quite honestly, in today's world, most investors are plug and play ETFs and wealth management for that matter. People that are doing your wealth management are typically index buyers of your investment dollars. And there are very few people are stock pickers. Whereas myself, I look at stock picking because I think that we can far outperform. And we've had some great successes, but we've also had a couple of hiccups because of geopolitical events too in some of our companies. And so, you have to go back in your question. You have to be willing to accept the risk, but the reward of being a stock picker can be very significant relative to indexing.
Okay, excellent. And you mentioned the geopolitical side of things. And of course, we had that massive story with Barrick this year. I mean, it went on from April, really, since those rumors were starting about something going on in Mali at the Loulo-Gounkoto mine. How, I guess, how are you seeing, how important is geopolitics right now? How big of a trend is this, is really what I'm trying to ask you, Cam, of,
Well, it's really
geopolitical
interesting you say that.
interference.
Just going back to West Africa, it's really interesting because Canaccord, we're a global firm and we have a very significant mining franchise in Australia. And our team in Australia have been extremely successful because there's money flows and investments into the mining space in Australia because they're not distracted by the US equity markets like we are in Canada, being a neighbor of the United States. And in the case of West African investments, the Australian mining companies that are trading in Australia and sponsored by Australian investors have performed very well in West Africa. You have West African Resources, Perseus, Northern Star. These companies have done very well in the West African exposures. Yet, if you ask North American investors to go West Africa after the Niger situation, it's almost uninvestable to them. And yet, we have companies here listed in Canada that are far underperformed because of their West African exposure. And yet, if they were wholly listed in Australia, they would be trading significantly higher than where they are. So you've got a tale of two stories. And I've always said this to you, Adrian, that the Western world's not paying attention to gold equities in the first place. And if they are, they're paying attention to the negative of some of these jurisdictions, being West Africa, for example. That creates a huge opportunity of value. Like one of our companies in particular is now looking at listing, and they're going to list in Australia because they will get validation and ownership base coming out of Australia into their share price, which will rebate the stock over time. Because right now, they aren't being recognized in North America.
Interesting. So to a certain degree, then, are you saying, that gold stocks, say, that are North American listed are somewhat overshadowed by this incredible performance, let's say, by the S&P, like ultimately, and so that Australia all of a sudden seems more palatable because, again, it's not as distracted as you say?
Absolutely. And the thing is, too, don't forget, the Australian investor, they still have a very strong mining investment culture there. We have a lot of retail brokers there that just solely focus on mining, and they do very well for themselves. I mean, we have our annual conference each year and they all come over, and I'm kind of envious because they have a pack, or I call them like a rugby squad of guys that come over, and they're solely focused on the resource space. And Canaccord Genuity has largely been a mining house in the past, but now we're wealth management, which is great as a foundation. But the transaction resource brokers like myself are very few and far between in the country now. And I look at that as a great opportunity because I don't have a lot of competition. Yet no one's really paying attention to the resource space. And, they're chasing all these other indexes and algos and that in US equities, right?
Right. And maybe you've already answered this question to a certain degree, but it feels like how you're describing Australia, wasn't that true in Canada to a certain degree? Like we had a pretty good reputation for this sort of thing. Has it just kind of dwindled away as a result of this overshadowing, so to speak, or were there other factors at work?
I mean, first of all, we had one heck of a bull market in precious metals going into 2012. Then we went through a very, very tough bear market going to 2015. That's 10 years ago. And, we've had some great success in precious metals since the bottoms, by all means. The problem is that you've had all these other sectors that have the narrative. And, Adrian, I think I mentioned to you before that, I've given numerous interviews on what's called narrative economics. Narrative creates price action, and price action creates ETF flows. Last year, we had some strong narrative on gold. Last 3 months, it's kind of disappeared again. And we just don't have any price action moves that are attracting the money flows into the space, unlike AI, for example, or other sectors in the United States. But this is how crazy it is, okay? The NASDAQ 100 just got re-indexed last month, okay? And the three new additions to the NASDAQ 100 were MicroStrategies, which is Michael Saylor's company that holds Bitcoin. Okay, the market cap of that company is 4 times the book value of its Bitcoin holding. Makes no sense. Second company was Palantir. Palantir, which is a government security focused company, trades 165 times PE multiple. And then the third one is a company called Axon, which is, people remember, the taser and body cams now. And so with Trump coming in, and that stock in particular became a meme stock amongst US investors, and it got grossly overpriced. But what's crazy about that is all three of those are grossly overpriced, and they're now just being put into the NASDAQ 100. That makes no sense whatsoever. But the fact is, the narrative and the market caps of those companies now justify it being accepted in the NASDAQ 100. So if you're buying an ETF on the NASDAQ 100, you're buying those three companies now, which are grossly overpriced. So that's where the money flows are going. And yet here we are, I've got my senior mining companies paying me a 5% dividend yield. These companies are doing very well fundamentally, and no one's paying attention because there's no narrative.
Right. So in a sense, another way of answering this question then about what happened to the gold stocks last year is the money flows aren't there, right?
Exactly.
And extrapolating on what you're saying, in a sense, we might say once there is a bear market at some point, whenever that happens in the S&P 500, then one could expect that perhaps the money flows will change and perhaps that's when the stocks will perform. But does that need to happen?
Well, no one has a crystal ball as to how or what's going to, ring the bell on when things start changing for us. Like I said, we had a very good year in a lot of our companies. Other companies, we had some disappointments, but the value still is intact. Going back to my example that I just referred to of the three companies now part of the NASDAQ 100, the narrative made them grossly overpriced, and they got accepted into the indexes, which people who are buying ETFs, which are most people of today's investment world, are buying these underlying companies. And I just going back to the cannabis space when that happened in cannabis stocks, and you saw Tilray hit $260 a share because all the ETFs were buying it. Now it's $2 a share. So if you want to play in the game of investing where everyone is, go at it. But if you want to buy value and wait for people to recognize it, that's the opportunity in the precious metal stocks right now. There's no money flows coming in because there's no narrative. And I still am fully of the opinion this US dollar just ran up here significantly in the last 2 months. Gold's still at 26.50. And gold's up for a reason because we're seeing gold purchases by the BRICS nations and these central banks around the world because of their concern about US dollar and US debt. That hasn't changed despite AI and NVIDIA trading where it is.
That's actually exactly where I want to go next is the US dollar. I mean, it looks like it had quite a year and really since October. I mean, there it was at, what do we have here? Like almost 100, like 101 or something on the USDX. Now at almost 109, 108.95. It has gone on quite a run. And even on the year, the US dollar is doing quite well here. So nevertheless, we had a good gold year, right? Up 28%, as you were saying, on the
Absolutely.
year. So in a sense, it was spectacular this year if you were in the metal.
Absolutely. Absolutely. And, the dollar move up here, I mean, again, I like to point this out. One of the reasons why the dollar is strengthened is because the long rates have gone up. And that's despite the Fed lowering interest rates. And it's a phenomenon that people are going, okay, why are long rates going up with the Fed lowering rates? Well, I still argue, and this is one thing going back to, period of time where we had 10 years of zero interest rates, where money was free, right? And so we had global debt go from 200 to $300 trillion. Now you have rates where they were, a year ago, and now rates are coming off, so everyone's optimistic about the economy again. But the reality is, long rates are going higher because I think what people aren't recognizing is, debt is becoming a riskier proposition on the long rates, and that's why the rates have been going up. And no one really talks about that aspect of debt. You've got U.S. debt at 34 trillion, deficit this year $2 trillion. Now, granted, Musk and Ramaswamy are going to come in and cut $2 trillion proposal, but I can absolutely guarantee you there's no way they can do that without doing severe damage to the U.S. economy because Social Security, Medicaid, military, interest costs alone, a lot of the fixed costs, I don't know how you cut that much.
Right. So we have, as you say, rates are going up on the long side. So like the
Hmm.
30-year, let's say. And so this is attracting money into the dollar.
Exactly.
It,
Especially
BRICS
when the
are
rest of the world lowering rates. I mean, we're seeing rates going down everywhere else around the world. And US has lowered their rates, but their long rates are up. Money flows coming in, right?
right. Now, how does this factor into, say, you mentioned the BRICS earlier? I mean, in a sense, like people talk about the BRICS oftentimes and they say, oh, they're de-dollarizing is the word they like to use, right? Doesn't look like things are de-dollarizing right now. So how are you reading de-dollarization, gold, BRICS?
If you're a BRICS nation or emerging market, a lot of these countries carry too much US dollar denominated debt. So put yourself in their shoes. Dollars going up against their currency and they carry their debt in US dollars. It's very painful for them, right? So one of the reasons why they have to also buy dollars to pay back down their debt. So that's adding to the fuel of the US dollar rise. But, if you look at what they've been doing here, the BRICS nations, they've been de-dollarizing and they've been buying gold. I've always said gold's the only reserve currency in the world that has no political attachment, no debt obligation, and no printing press. And so what you're seeing amongst a lot of the non-Western world central banks is they're tired of being beholden to the US dollar. And they're increasing their gold reserves. And they're, in essence, going back to a gold standard themselves. Because I mentioned to you before that in the case of like India buying oil from Russia, with the weaponization of the dollar, of course, the dollar can't be used. So what you're seeing is these central banks increasing their gold reserves. So now India buys their oil from Russia. They use their own currencies, but the collateral is gold in that transaction. So the reserve currency in that transaction is gold. And that's a trend that's been going on really since 2009. After the financial crisis, and this is really important, Adrian, after the financial crisis, the world saw what the US did. Look what happened to the US banking system. It collapsed. Who ended up paying for it? The U.S. taxpayer. How many bankers went to jail? Zero. So the U.S. protected their own banking system, and everyone else was left in the wind. And so when you look at U.S. dollar, U.S. debt, are you going to trust that system 100%, or are you going to actually have assets outside of that U.S. debt, U.S. dollar? And there's a correlation between central banks of the world increasing gold ownership since 2009. And people don't even think about that. And case in point about thinking, look at the financial crisis of '08. Today's investor, how many people who are buying stocks like MicroStrategies at 4 times book are even thinking about the risks of capital markets after seeing something so devastating that took place in 2008? Their memory's forgotten that stuff, right?
Right. So another conclusion perhaps I could draw from what you're saying here is, yeah, gold may be at a record and is up 28% last year. But when you look at all of the liabilities that exist, the debts and everything, and as you put it, like gold at 2650, some people might say, well, that's expensive. And it sounds like what you're saying, within the context that gold is in, there's still value there. Like it's still an attractive proposition when you factor in relation to what?
Well, there's incredible value there, and it's serving its purpose. I mean, if you were in Turkey and you had gold when the Turkish lira fell apart against U.S. dollars, I mean, you protected your wealth. So through this whole chapter, gold has served its purpose, and it's hit all-time highs last year. So it's been an incredibly strong performing asset class, but no one talks of it in that category, right? And so the trend, as I say to clients, I mean, it's like a freighter that's changed directions. And now it's in the open ocean. It's heading from Vancouver to Tokyo. That direction's set. And that's the direction central banks have now set for gold. Gold is a reserve currency. It's now surpassed the euro in terms of holdings, second to US dollars. And US has $34 trillion in debt. Interest costs alone are greater than the cost of military. You've got all these risks in the system. And gold has no printing press, has no debt obligation, it has no political attachment. And so the rest of the world views it that way because they've gone through hardships. They've gone through currency problems. They have a deep memory of history. The American investors have a very shallow memory of history. Case in point, what happened 3 years ago when all these high tech stocks, went down 90%. And now everyone's clamoring back into these things at valuations that don't make sense anymore. So there's a classic example of, the muscle memory of investors is very short term in North America, whereas foreigners and central banks have a long-term view, and gold is proving itself as a reserve currency asset right now.
That is a fascinating stat that you mentioned there, Cam. So just to clarify, like from your understanding, there's more gold held than euros in central banks right now. Is that kind of if you factor in all central banks together, or is that the idea?
Absolutely. Absolutely. If you're going to sell US dollars now, what currencies are you going to diversify into? If you're a U.S. investor and you own your investments in U.S. bonds, U.S. stocks, U.S. real estate, you're all U.S. dollar. So how do you protect your assets in U.S. dollars? One of the arguments we make is you have to have a portion of your portfolio in gold and gold equities. Makes sense.
That is fascinating, and the symbolism of that is striking. Okay, so as we start to wrap up here, Cam, where are we right now then in terms of the gold narrative, the gold stocks? How are you kind of looking at 2025 as we start a fresh year? Is it sort of a do nothing is the best option if you're already invested? It's sort of like let things continue. Like, how are you seeing things? How are you approaching the market?
We've got a lot of random noise coming forward here with the inauguration of Trump and what's going to happen with tariffs and all these promises he's made about what's going to take place. I mean, we've got a lot of unknowns. And as I said, narrative can drive short-term volatility. So, there's going to be a lot of volatility happening. I just look at gold price itself right now. The dollar's already rallied strong, and you're going to see uncertainties evolve. One of the things I want to point out, okay, the new Secretary Treasurer, Bessent, of Trump's administration, I think he has 40% of his wealth or non-real estate wealth in gold. He's a big gold guy because he actually sees the value of gold as an asset class. So it's kind of interesting to think that the new Secretary Treasurer is a long-term holder of gold. And, the US dollar too. The US dollar is at its heights right now. It doesn't serve the US well either. And Trump has made overtures in the past about a weaker dollar being beneficial. So who knows what the narrative and the trends are going to take place. But the one thing for sure is when you have $34 trillion in debt, you've got a US dollar where it is right now. You've got valuations near all-time highs, record ownership of stocks, all-time highs, there's a lot of risk that's evolving. And gold has proven to be an asset class that's protected you during times of risk like this. And so we're very bullish. We're very bullish. But you have to be willing to accept there's going to be risks and volatility. But the sheer fact that here I am, doing interviews and talking to investors and that, and no one's paying attention to the sector in North America because they're chasing all these other stocks, actually makes me feel very, very bullish. And yet it's very difficult being a lone soldier because everyone wants to be a part of a trend. But the biggest gains in the market are when you're buying when no one else is paying attention. And that's the opportunity we have right now in the gold equities. But you do, in my view, need an investment advisor who can tell you which companies to buy and which not to. Like I would never have bought Newmont. In case in point, the stock's down 30% from its high. Whereas Kinross we're big owners of, and it's doubled for us. So we've delivered because we were stock pickers rather than ETF buyers.
Right. Like it requires a true expertise. And to your point, the value is in the stocks, let's say, over the metal right now, we could generally argue, right?
Correct.
So finally on that point, and basically final question, oftentimes your retail investor will go out and be like, well, I want the most leverage, I want the most bang for my buck, so I'm going to buy an exploration company. Because when this thing takes off, that's going to do like 30x. And I don't want you to give financial advice, Cam, but I want you to give insight and market wisdom for people, who are considering, like, put it this way, how are you approaching the market in terms of, say, big cap developer and the exploration companies?
Well, first of all, the sector is absent of new capital. We've had money flows out of the funds for a long period of time. So because of that, a lot of the junior explorers have been left for dead. And I'm not a big buyer of the juniors right now because there's just too much risk. I mean, exploration is exploration. When I can buy companies that are paying me a 5% dividend yield trading at 10 times PE multiple, why would I go down the risk curve when I could buy something there that I think is going to go up by 50%? And so there's a time and place for speculating in the juniors, and that's when there's a greater audience of investors who are willing to speculate. And that doesn't exist in today's market. So, it depends on your risk profile too. I mean, the seniors, intermediates, developers, those are our primary focuses. The developers, there's a scarcity of assets. And in the last cycle going into 2012, we had 8 companies we were big investors in that were taken over by mid-tiers and seniors. And there's just a scarcity of assets out here. And I think that, the M&A is going to get exciting at some point. Now, when it does, I mean, we've already seen numerous M&As, and typically in the past, they would ignite a lot of money flows coming into the sector. Yet we've seen these takeovers, and some of the competitive assets out there that should get re-rated don't even move that day because there's no new money coming in. So it depends on your risk tolerance. So that's the thing. But the junior explorers, there's just no speculative money in the space right now because everyone's been beaten up. And so I think that, I'm not looking at that space right now, unfortunately, for those companies because they're all needing to raise capital.
And so one has to consider the risk also
Absolutely.
As you consider the potential gains you might get here. Well, excellent. Well, thank you for opening the new year with us, Cam, and sharing your insights on the gold market. It's always fascinating. Cam Currie of Currie Metals and Mining Group at Canaccord Genuity. Thanks for joining us on this week's Northern Miner podcast.
Thank you, Adrian.
Thank you once again to Cam Currie for appearing on this week's episode of the Northern Miner Podcast. And just a big thank you to you, dear listener, for continuing to support this program as we begin a new year. If you want to help out the podcast, please leave us a review in the Apple Podcast directory, share it with your friends, and until next week, take care.